Hi everyone, welcome to Admiral Markets. My name is Chris. We're going to take a look at a live webinar, strategy webinar today. First of all though, before we take a look at the charts, be aware of this disclaimer explaining the fact that the webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Also, please be aware that trading for exchange and global financial markets in general are considered higher risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. So today is the 29th of March 2017, and typically one would not expect it to be an important day, but Brexit has occurred, and basically the process has started of the UK leaving the European Union. Basically that has happened when the British ambassador to the EU gave the letter or note or notice to the European Council President, which is Donald Tusk, and that was in Brussels earlier today, within the last few hours, I guess. And that does trigger the exit. The 2-year process of negotiations is starting. If there's no deal made, then the UK will leave automatically, apparently, at 29th of March 2019. If there is, for instance, an agreement by the remainder of the EU countries that an extension is okay, then there would be a prolonging of that negotiation period, but everyone has to agree on that. 2 years is quite short. To give you an idea about that. It is not a long period. It seems long for us as traders, right? We're looking at 1-hour charts, but no, for such things, 2 years apparently, as far as I've read, is not so much. When you're looking at negotiating trade deals, it takes years. 5 years is not so rare, even up to 10 years sometimes. So that's quite a tough deadline. Let's see how that negotiation handles. But before we dive into that, that's something that will, I guess, start next month. Obviously, it is, of course, the first time that such a departure has happened in the history of the European Union and the European organization. Prior to that, the European Community. So that's a historical event. I don't think the EU is happy about it. In Britain, I guess it's 50-50 because, well, the referendum was close to 50-50. It was 51.8 versus 48.2. So it was obviously a very relatively split result, although, of course, the no's had a slight edge there. Obviously, that's why we have this Brexit. So yeah, that's how it is. Let's take a look at the pound and how it's reacting to this in just a second. But here you see that news event and more news events. It's good to be aware of those. So let's take a look at the charts right now. All right. Pound USD, yesterday we were looking at the 23.6 fib as a potential stalling spot yesterday. Price did fall through that actually since our last webinar 1 day ago, and almost at the 50 fib. So far nothing spectacular, and this is something that Nenad and I were thinking, and what I mentioned yesterday too, is that more or less, there's going to be some movement, some volatilities, because it is a news event, of course, and it is something to note, and it is something that could impact that volatility, impact the price movement, but it's not probably not going to have that wild effect that we perhaps saw. Of course, we did see in June last year when the actual referendum vote came and was known. So that so far seems to be true indeed. Some ups and downs. Yesterday, a clear downside as before, as anticipation of the Brexit. Also, don't forget that there must have been some profit taking in this upside move. Let's face it, this was a pretty good rally. This was a 400 rally, so some profit taking probably pushed it lower right before that Brexit. That makes sense. Now, one of the ways, because this is a strategy webinar on breakout and bounce trades, and we talked about this already in the last 3 weeks, I believe, that there's basically using candlesticks is a good way to understand whether a break or bounce is going to happen, right? So we were talking about the last 3 weeks about how to identify support or resistance, what seems more likely a break or bounce, looking at not only candlesticks but also the number of attempts to push through a level. So we talked about multiple time frames, using 3 time frames to identify multiple time frame analysis. For instance, using the daily chart as the highest time frame, the 4 hours the middle, the 1 hour is the lowest time frame. The daily chart, of course, the support and resistance is the strongest, the 4 hour is medium, and the hour is the weakest. The daily would have the role where you're basically looking for price to get into that zone so that it's really at a key level, right? And then it's either going to break or bounce that key level. This basically we can do on all time frames, but the lower time frame I go, the more likely I'm looking for breakout, actually, rather than a bounce. But both are possible, break and bounce at all 3 time frames. How do I distinguish whether a breakout or bounce is going to happen on these 3 time frames? So when looking at the daily chart, for instance, one thing is to understand the strength of support or resistance by looking at confluence. That's point 1, confluence. The second is if there's a first, second, third, or fourth attempt to break or bounce. The first attempt typically is a bounce. The second attempt could be both. The third or fourth is typically a breakout. So number of breakout attempts and the candlestick reaction to the bounce or break spot. These 3 things will give you the most information whether a break or bounce is going to happen. All right, and these 3 things I can use for all time frames. You know, daily, weekly, monthly, 4 hour, hourly, 15 minute, 30 minute. They're equally valid. The reason why I use 3 time frames is because for the daily chart, I'll be looking for price to get into a strong support or resistance zone. Then on a 4 hour chart, I'll be looking for a trend, and an hourly chart, I'll be looking for a breakout with the trend. So for instance, the daily chart price is at a strong resistance. It's approaching strong resistance, right? Or let me do it the other way around. For instance, price has broken above resistance. Daily chart, this is resistance, price has broken above it. The next resistance is all the way up here, okay? On a 4 hour chart, I zoom into a 4 hour chart and I see an uptrend channel. Then I zoom into the hourly chart and I see a bull flag there. So from this perspective, I'm looking for a break above the bull flag, a break of the resistance line as a continuation of the momentum of the 4 hour chart or the trend of the 4 hour chart for continuation on the daily chart to the next resistance level. So this is how you can use 3 time frames to get a feel for the structure, and the support and resistance levels have different roles depending on the time frame. On the daily chart, it's a breakout. On the 4 hour chart, we might be using the bottom of this channel as support. And on an hourly chart, I'm looking for a break above the resistance of the bull flag for a continuation breakout. So I'm using support and resistance in 3 different ways, on 3 different time frames with 3 different kind of mindsets in mind, or 3 different ideas in mind. So the daily chart, it's a breakout. The 4 hour chart, it's actually support. The channel, the trend channel is support. And the hourly chart, I'm looking for the break of the pattern. So, a lot of ways how to use it. But this is, a combination that I like a lot. Yesterday, we talked about the 23.6 fib probably being a support level and probably making a flag. But it didn't happen. What could have been a signal to us traders that might not happen? Now, one of the things is that the 23.6 fib is a rather shallow fib. Fibs themselves are, again, a different story. Tops and bottoms are pretty clear in a way, because tops and bottoms just have one level, right? That's it. That's a fractal, and it's static and will always stay there until it's broken, okay? But the fibs are a different type of support or resistance. Not all fibs will get respected on a particular time frame. Typically, 2 out of 3 will get respected. So was there a chance that 23.6 fib would be respected? Yes, I think there was a decent chance, 2 out of 3, as I just said. But is there a chance it would break through? Yes, that's also possible. right? Actually, I was talking about yesterday that if there is a bear flag, it would be perfect for follow through. That didn't happen, yeah, not on this time frame at least. But what kind of signal could have that given us? Now, the 23.6 fib is one of the things that I maybe should have emphasized more yesterday was that this is a shallow fib. So when price is starting to retrace this entire swing high, swing low and broke this support level, 23.6 is a shallow fib, therefore the confluence is not that great. Therefore not a very strong support level. That's one point. That's why I was also expecting price to go deeper, like to the 50 fib. The second thing is this the first, second, third approach? This is the first approach. So some reaction would normally, is possible. But the ultimate thing that here we have to keep in mind is the reaction of the candlestick and the size of the candlestick in relationship to the 23.6 fib. And what do we see here? A strong bearish candle, right? That bearish candle is a decent sized candle. It's one of the biggest candles that we've seen in this chart. It is, if we look at the high and the low, it is 83 pips. That's not bad, even for a pound dollar. Pretty good size, in fact. The close, in relationship to the high and low, or to the low, I should say here in this case, right? The close is only 3 pips off the low. That means that the size of the candle is 83 pips, but the close is only 3 pips off the low. So 3 pips wick at the bottom divided by a candle of 83 pips. So what is that? It's less than 5%. 10% is a tenth of 83 is 8 pips. Half of that is 4. So it is about 3.75%. Right? Roughly speaking, 3.7% is the wick. That is nothing. Does anyone remember the percentages that I use for my trading? What is still a decent wick percentage for a breakout? Up to what level? Does anyone remember? A small check here if my percentages are being used perhaps or not. But these are the ones I use. So what is 3.7% is good, but what is the max? To what level would still be acceptable in a potential breakout? Let's see if anyone remembers. Anyone here? Still silent. Looks like it doesn't ring a bell. Okay, so the level I use, all right, max is 30 to 33%. That's the very max. But ideally, 20% to 25 is a good breakout candle if the wick is not more than 20 to 25. Okay? The best are within 10%. Those are excellent. 0 to 10% wick is excellent, right? 10 to 20 is good. 20 to 33 is okay. So what is 3.7? It's excellent. It's actually within 5%, which is super excellent. Very good breakout candle, as you can see. Good size too. It's not a small candle. So this means that this candle is most likely, and it's also even closed below it to 23.6 fib, but that's the extra bonus. Okay, so yeah, that was most likely a breakout, and indeed price continued to fall downwards. So that was one way of knowing about that. Now today, a bit of a rally, now downside. So far, not a really massive reaction to the Brexit, to be honest. I think it could still hit the 50 fib and S1 at 123.50. Personally, I'm not yet, looking to trade the pound USD at this moment. I do think that eventually price can get higher and can make a rally up to about 125 before it makes one more push down. That's what I would expect. But whether it does that here or a bit higher, I would still rather wait for tomorrow, probably. Tomorrow morning, I'll do my wave analysis again and review it. But considering the fact that this looks like a 5-wave pattern, I think that this could be ready for an ABC up to the 61.8, 650 fib at around 125, 125.25. I think that would be an ideal zone. You can see price stopped at the 23.6 fib sorry, the 38.2 fib. So these could be the next stopping reversing spots for one more downside. This could be A, this could be B, this could be C. Could price fall down to 123.50 in the S1 before going up to the 50? It could happen. This could still be a wave B, even if it hits the S1 and bounces like this. So I'm waiting for price to get up in this zone first. That's my plan at the moment for the pound dollar, but I'll be probably looking at it rather tomorrow. So far, you know, from a volatility point of view, nothing earth-shocking, at least regarding the pound dollar. Euro dollar, we talked about that yesterday too, and we're looking at basically price to make a bit of retracement here like this, a bear flag. That's what happened. As you can see, neat little bear flag. Let me take a look when we were looking at the webinar yesterday. It was about here. No, I'm not sure actually. Sorry, hang on. Yeah, here. Yeah, here I was looking for price to hit the 50 fib and bounce at the 50 fib, which it didn't do. It didn't bounce. So that's okay. But nothing, nothing gained or lost with that. One of the reasons why I didn't trade the 50 fib was this bearish candle and the next bearish candle. So looking at these bearish candles, basically, you can see that there was no reaction, no bounce at this 50 fib. Although I had the 50 fib in mind to trade it to the upside, I didn't get any signal that price action was showing that that would be a good idea. So that's one of the beauties about price action. That's why I like candlesticks so much, is that, you know, I might have a trade plan idea in mind, but if price does not go with that flow, does not confirm it, then it's typically a good warning. And here you can see a perfect example of that, where price did not respond to my level of interest, and therefore it was good to stay out. And that was very true. It was good to stay out. As you can see, looking at these candles, actually, the 50 fib is a decision zone. I said if price breaks below the 50, actually, that it probably will extend lower because that is a break or bounce spot. If it fails there, it will probably not move any higher. And basically, this candle right here, as you can see, decent sized candle. Nothing wrong with that candle. Average size, but still pretty good as a candle. Approach the support and look at that low compared to close. It was only 3 pips off. The entire candle was 23 pips. This is an hourly chart. 3 out of 23 is 15%. Not very small wick. Next candle, small wick 2, pushes through the 50 fib, and you get a small bear flag. So today I was looking at this bear flag this morning and looking for a break of that bear flag. As I showed in my wave analysis, if that bear flag breaks, we should get one more push in wave 5. And that's what happened. Euro dollar kept pushing and below the bear flag and fell towards the pivot point. Small bounce at the pivot point, small bear flag there, and now falling to the S1. All right, so this is how basically we can use decision zones to trade either way. And this morning it was down. Alrighty, if today's candle closes with a close in the low, then the S1 will probably break tomorrow, I would expect. Then this support level will not hold, most likely. And maybe a retracement up to the pivot point, for instance, could be sweet. Trace halfway that candle. I would expect to follow through down to the S2 myself. All right, here you can see those bear flags on the 15-minute chart. Pretty neat. At this moment, with the S1 so close by, I'm not really interested in trading it to the upside because of the downtrend and the bearish break. I'm not that interested in trading it at this moment to the downside either as yet because it's at the S1. But if price were to have a 4-hour candle that shows a close near the low with a decent sized candle, the candle would have to be at least 40 pips. So let's take a look at the low here and high. 107.23. All right, if it pushes below 107.25-ish, preferably close to 107.10. A few pips, and the close is a few pips off the low, something like this, for instance, a candle like this. Then later today, there could be a small bear flag on the lower time frame, and I would then probably not be surprised if there's a continuation right away like that. But at this moment, I think waiting for today's candle is maybe the best on the euro dollar. All right, dollar yen. Yes, yesterday I was talking about a bullish candle on the 4-hour chart as a reaction to the S1, a reaction to this bottom. Part of that has to do with time factor and time pattern. 1, 2, 3, 4, 5, 6, 7 candle. Wait, I think I counted it yesterday different. 1, 2, 3, 4, 5. This was the 6th candle. I said the 6th is bearish. I want to wait therefore for one extra candle. But if the next candle is bullish with the close near the high, I think there's a good chance of a bounce and weakness that this bottom will not get broken, that this is a hook back from our upside. That's exactly what happened. We had a bullish candle and we got a good follow through. So any entries upon that candle made some good gain, as you can see, up to the minus 61.8 target. Anyone holding that trade, perhaps still up in profit, in fact, could move it to break even and hope that it bounces one more time. Yesterday, I also said that if it reaches the pivot point and makes a bull flag, that could be interesting for one more break to the upside. All right, so that's something we can discuss now. But this particular candlestick pattern is something I discussed clearly in yesterday's plan, indicating that for myself and indicating that this swing high, swing low could then be over with the failure here and the hook back, and we could get a retracement of that entire swing high, swing low. So that seems to be happening at the moment. How far this bullish retracement will go remains the question, but I think the pivot point at 38.2 fib is definitely a level that makes sense to me. And it could go higher than that, but that would make sense. So let's take a look at the hourly chart. And do we see any kind of pattern that makes sense for a breakout to the upside? And let's put a fib from here to here. All right, price bounces to 50 fib. We see some reaction to the 50 fib. You see a bit of a wick. That wick is not that grand. Let's take a look at the candle itself. High-low calculation quickly. 31 pips. The close is 11 pips off. So 11 divided by, what was it, 31? High-low is 31. Close is 11, yeah. 11.5 divided by 31. So quick math explains that that is about 33%, I think, right? 37% apparently. So yeah, it's not a breakout candle obviously, because 37% is a wick, decent wick. It's not a reversal signal necessarily either. But we do have two bullish candles after that. So far, I'm not impressed, and I would probably rather wait for a breakout of this trend line. Take a look at the 50-minute chart. We can see that price is choppily moving lower after good momentum to the upside. That is exactly what I was talking about yesterday as well, so that's good. But this is so far, this particular piece here has been quite choppy. So I think it's probably best to wait for an actual breakout above 111. So looking back at the hourly chart, I would probably want to see a breakout candle with a close near the high above that trend line. That would, I think, be my signal I'm looking for, a breakout candle on the hourly chart as a breakout up to 111.60. And then after that, 112.10. If it does fall one more time, the same pattern could happen again, perhaps a bounce at 61.8 or a bounce at 78.6 fib, and the same potential breakout after that. All right, so those are potential longs there. What I'm hunting for on the dollar yen later today, tomorrow, depends when the breakout happens or the bounce happens. But this is something on my list for later today still. I will keep an eye on it. whereas the euro is more something I want to keep an eye on tomorrow. I think I want to see how this daily candle closes, as I said, and the pound I am more interested in for price to wait to the 50 or 61.8. All right, so I think that's it at the moment regarding the majors. Regarding the AUD New Zealand, yesterday I was talking about the 4-hour candle being preferably 40 pips, remember? At least 40 would be great. I said that if it's close to 50, it would be even better with the close and the high. So let's take a look at that candle. This is that 4-hour candle. I look at that candle, pretty strong, high-low difference here, 45 pips, right? So definitely above that 40. That was great. And look at the close near the high. Only 1 pip off. 1 pip divided by 45 is absolutely nothing. So bulls strongly in control, 4-hour time frame, strong breakout candle. This is the candle I was looking for. This candle as well, because it was so strong, basically no retracement, just right away broke through it. There was some retracement on the 50-minute chart though, after the pivot point was broken. This small little bull flag was a neat little fellow here to trade for the breakout to the upside on the 50-minute world, or the 4-hour chart could have been a great one too. In the meantime, I would not hang in too long. Price is above the pivot point, so I would just move it to break even right there, below the pivot point, below this 4-hour candle, and just take the risk off the table. Why would I do that? Because of the fact that I think that if it retraces, it's difficult to know if the bulls will regain control. Is this a pullback from upside? It could be, right? Certainly. But could this be basically a trend, hook back and downside? Yes. So I would rather re-enter again somewhere down here if I see signals for that than hang on and hope for the best. Rather than hanging in and hoping for the best, I'd rather reduce the risk. I try to re-enter lower. If it doesn't take me out, then price will move up anyhow, and I'm in that trade, and I'll get the profit, even if it is moved to break even. That's the advantage when price has already broken through with a decent candle above a resistance spot. I can now use that resistance spot as support level. I can use this low of this strong 4-hour candle as a support and the pivot point as support, this candle low as well, move it right to break even and sit back and enjoy. So that's my view on New Zealand. So that was a good breakout candle and a good breakout above this channel. The pound yen worked out nicely too. We talked about, the euro yen, excuse me. Euro yen, we said yesterday that this is probably a bouncing spot. Does anyone remember the euro yen? That this is still a bouncing spot probably because this is the second attempt and that probably will price go up to make a head and shoulders here or hit the pivot at the top of the bull flag. Therefore, stop loss should be above 112.50. Price went up to 112.43, so it challenged the 120.50, but didn't get there luckily. Price turned. For those looking for a price action signal at the head and shoulders level or at the pivot or the top of the bear flag, this wick was a decent one. Let's take a look at it. The high end, the close was 21 pips off the high. The total candle was 25 pips. So 21 divided by 25. All right, well, that's obvious. 85% is wick. So does anyone remember my rule that I use for how big the wick should be before it's an interesting signal, that the potential signal, of course, depending on context too. We had context here. We talked about that. So does anyone remember that percentage I use, how big of the wick I like to see before I consider it a potential bounce signal? Because in this case, the bulls didn't have control. Why? Because 85% of that candle was wick. So obviously it was a bullish candle, but obviously as well, the bulls did not hold on to that control within that 4-hour candle, as we can see. because 85% of that candle was wick. So obviously, right, for most of us, 85% is a big figure. So kind of makes sense, right? But what is the kind of cutoff zone that you might want to think about? Does anyone have a figure in mind? Does anyone remember what I mentioned last time? All right. Well, won't leave you in suspense any longer. 67 2/3 is the cutoff for the best kind of bounce candles. Anywhere, I mean, 50% was the very minimum, I would say, for a decent, to be considered a decent bounce candle, right? I mean, everything above 2/3 is good. 85% is excellent, obviously, right? So, good bounce candle. The one before that, let's take a look at that. It's about 29 pips, and the close is 17 pips off. So that's about 2/3 wick. It doesn't look like that, but it's 2/3 wick. So that helps too. Two candles like this in a row also helps the credibility of a bounce. So yeah, we said look, or I said look for, I'm looking for bounces in this zone, right? The candle proved that. So then I said the next time it will probably be a good breakout. It should be a breakout to the downside, down to the 78.6 fib and the S1. Does anyone remember that? So that happened. That was great. So let's talk about the breakout. This was the bounce. Let's talk about the breakout. You know, one thing could have been to look at this 4-hour candle. This was a decent breakout candle. So as you can see, that led to a continuation indeed. Let's take a look at this candle. You see a small retracement, but then follow through. So this was a good 4-hour breakout candle. I think nothing wrong with that candle. Let's take a look at the hourly chart, because this could have been an hourly breakout too. This is an hourly trend line too. This is attempt 1. This is attempt 2. It's attempt 3. The chance of a breakout is definitely severely higher. So let's take a look. This was the breakout candle, and decent candle, closed near the low. So I think that was fine, and indeed follow through to the downside. But of course, the Brexit had part of it, so that's something to be aware of. But that aside, though, still a good breakout candle and follow through. Target has been hit in the meantime. So is this a bouncing spot? Yes, it is a bouncing spot. Is price reacting to that bouncing spot? Let's take a look at this candle then. High and low difference is 81 pips. The close is 40 pips off. So we're looking at a 50%, 50 pips off. No, I'm looking at it the wrong way, excuse me. 30 pips off. I have to look at the low. So 30 pips wick, right? Divided by an 80, what was it, 81? 81 pip, yep, 81 pip. All right. So 30 divided by 81. Well, that's about 38%. 3/8, right? 1/8 is 12.5 times 3. So about 38%. So what does that tell us? That it's not really a great bounce wick yet. I mean, there's some wick. But on a 4-hour chart, it's not fantastic. It's also not a great breakout trade. So there's definitely some reaction to that level, okay? But not enough for me on a 4-hour chart to say, hey, wow, that's really something to consider. No, I would have to wait for the next 4-hour candle to see how that closes. On an hourly chart, I might consider it because there is a 1-hour candle, but it depends. Do I think this is a 1-hour opportunity or not? I think this is more a 4-hour fib than a 1-hour fib. So probably best to stick to the 4-hour chart. So how do I know which time frame to use? I really look at whether this is, you know, the tool I'm using is from that time frame. And this trend line, this 1-hour trend line was definitely a 1-hour trend line, right? This fib, I don't think is necessarily a 1-hour fib. This is a weekly pivot point. And this is definitely an hourly pivot point. This is a 4-hour pivot point. This is a weekly pivot point. So we're talking about higher time frame support. And therefore, I think it's better to use the 4-hour chart, 4-hour candles. Let's see. I'm thinking about, yeah, yesterday we talked about the pound yen too. Of course, this is also Brexit, but related, but still talked about the fact that this could be a bounce back and a continuation lower. So that did happen. Now, this was not an easy one to trade, I think personally. So I don't want to dive into this that much. But anyhow, the formation did complete itself lower. Now it's at S1. A bit of a reaction, bullish candle. This is a pretty bearish candle. Let's take a look at this, the details of this candle. Looking at this candle at this moment, I would expect that this is still a retracement. Let's take a look at the daily chart. Oh. Considering the dollar yen, I might even consider looking at the pound. I maybe even consider looking at the daily candle close. If the daily candle close is near the low, then probably the S1 will break tomorrow. Depending on how you count, this is attempt number 1, this is attempt number 2. So whether this is a break or bounce spot, it could be both, in fact. This is a pretty strong candle. That's definitely true. So this could be a retracement for more downside. Could be good to look for bearish candles on the hourly chart, for instance, to kind of sneak in a turn here. That could be something I might consider later today. But I wouldn't mind as well looking at this daily candle to see how it closes. So I'll keep an eye on that as well. All right, your odd, pretty great example of a strong candle right at support breaking after that though. You see, on many traders that would be just trading automatically the pivot point, for instance, without waiting for some reaction, first would be heavily stuck in that trade right now. Sure, there's a lot of confluence at that zone. There's a Keltner, there's a previous bottom, there's a weekly pivot point. So are there arguments to be found that this could be confluence support? Oh yeah, certainly is, right? Certainly. This is the first attempt too, right? So, but when counting attempts, we also want to be careful with counting. This is not so much the first attempt as so much as a bounce or break spot. What I mean with attempts, I want to clarify, is that if we look at the pound yen again, right, on the, let's say, hourly chart, all right, we could say, for instance, that this is the first attempt to break this. That's the first attempt, and that this is perhaps the second, and this is perhaps a third attempt, right? Or this is not even the second, but this is the second, and this is the third. So, 1, 2, 3, for instance, right? Now, back at the time, this could have been a pivot point here, and we could say this is the first attempt. But when I look at attempts, I am more inclined to count previous tops and bottoms. All right, because this is a bottom, this is a clear bottom, this is the first attempt to break that bottom. When looking at pivot points or fibs, it's a bit different. So then I don't really count whether this is the first time it's approaching it. It could be the first. It doesn't mean that it always has to bounce because it's the first time that it's approaching it. So I make a distinction between tops and bottoms basically, and pivot points and fibs. With pivot points and fibs, it's even if it's the first time, it's either bounce or break. With tops and bottoms, typically there's a bounce. The first time, second time, both can happen. Third time, it's probably a break. For fractals and tops and bottoms. So with candle close near the low like this, a candle like that at the pivot point, most likely, as we've been already explaining in this webinar, a breakout will happen. That's what happened with the euro odd. So it could be good for even for intraday time frames. I know we're looking at a lot of 4-hour charts, but don't get me wrong, this could be good for intraday too, because then once the 4-hour candle closes here, we know that this flag like this is an interesting pattern to trade an intraday breakout. So the 4-hour is kind of the analysis, the trigger. But the 50-minute chart here provides the opportunity to trade it, and you get the kind of the intraday setup on the 50-minute chart in combination with the 4-hour candle here. Put a fib from here to here, and boom, price hitting the minus 61.8 target. 38.2 fib, and right down to the target. So I think that those are most of the things we discussed yesterday, and we saw how they played out, what I was saying beforehand, what we saw afterwards, how to read those candles, how to read that price action, how to use that info, in my view, in my idea. So candles, really, 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 really valuable, I think. Is there anything that you have in mind you would still take a look? We have time for one more currency pair, then I need to push off. If you have anything in mind, let me know. I think that these were the most of the ones we discussed yesterday. For more webinars, feel free to go here, Education Forex Webinars, or click on the Analytics right here, Technical Wave, Fundamental Analysis. Lots of stuff there to view, plus of course MetaTrader 4 Web Trader, MetaTrader 4 Supreme Edition. That's great with MetaTrader 4 Supreme Edition because it's extra plugin from Admiral Markets, specially developed by Admiral Markets with mini charts, which makes multiple time frame analysis easier. So a lot of this is multiple time frame analysis last few weeks. Usually I look at multiple time frame analysis. That's great additional value there. Plus, of course, the Admiral Pivot Point and the Admiral Keltner, part of the indicator package that is goes along as well. So those are great things. You might want to check that out after this webinar. MetaTrader 4 MT4 Supreme Edition. All right, folks. Well, thanks so much for joining today. Hope that these price action webinars help you. I'm a big fan of it. Looking at price action and market structure is a great combination, I think. So I hope that pushes your trading perhaps to a different level again. And wish you good trading. And talk to you soon. Cheers.